All right, everybody. Thank you. Today we've got Mr. Mike Reedy Jr. here with the Crane Agency, and we are going to be talking all about homeowners insurance. I'm excited to have Mike on. Mike's my homeowners insurance expert. I've got a lot of policies with you and a lot of questions for you today. So thanks for being here.
You're welcome. Thanks for having me, Adam.
Absolutely. So I guess we've known each other now for something like 20 something years, right? We were roommates back in like 2002 or whatever that was.
Right.
But you've been insurance as long as I've known you. This is kind of a family company, right?
Right. So the joke goes, I've been getting paid to be in insurance for about 15 years, but I've been in it my whole life. I'm fourth generation at Crane. I work with my dad, 3 uncles and a cousin, a couple more cousins in the pipeline. But it's kind of in the blood. So here we are.
Sure. Okay. I love it. And like I say, I appreciate your time today. Can you just give me a general overview of homeowners insurance, what it is, when people get it, why do they get it, all that kind of stuff?
Certainly. So homeowners is really just, it's the greatest protection for any individual's main asset is their home. So homeowners insurance provides 2 different types of protection, both property and liability. Property is it's kind of divided up into 4 parts. There's the main dwelling, which is the house itself, other structures, which might be a patio or a detached garage or a pool, something like that. Personal property, which is all your own stuff. And then loss of use, which is in case you have a fire or a tornado comes through or something happens, an insured event that makes your home uninsurable pays for you to find housing elsewhere until your home is back up to what it was before. The second part of it is liability. Everybody has personal liability. If you are found to be negligent or at fault of committing some act that someone else holds you liable for, your personal liability policy is included with the homeowner's policy for certain limits of 100, 300, 500,000, sometimes up to $1 million. And there are a couple of different types of homeowners policies, Adam. One is just the main home. It's, a home you own, all your stuff. Then there's a condo policy. We call it HO4. It kind of dictated by the bylaws, generally from the walls in, all your stuff. And then a tenant's policy is just renter's policy. It covers your personal liability. Personal property plus your personal liability.
Okay.
We most often see people get homeowners when they purchase a home. It's generally a 12-month policy. There's some type of differentiators. If you're rebuilding or remodeling, you want to get what we call a builder's risk policy ahead of time, but that's we can talk about that later. But generally, people just they renew on the anniversary date of the closing. Sometimes people switch midterm if you think you're getting hosed on a rate and want to switch midterm, you're welcome to. You got to go through a couple of hoops, but it's not too tough of a process.
Okay, interesting. It's like, that's a lot. I mean, even right there, we're just getting started on the video and there's so many different types of policies and things like that. That's why it's important to call someone like you. Not that we can just get our own insurance anyway without someone's help, but you guys are a broker, right? Can you tell me kind of the difference between a broker and whatever the other option is?
Right. So there's a few different options now with the dawn of the technology and information at your fingertips. There's a few different types of options. One is you call a Farmers or a State Farm or a Liberty directly. Just get one quote. You can go online, do it yourself. There's other places that are kind of some new to the game guys trying to disrupt the industry a little bit. Pie Insurance is one of them. You kind of just call and they'll do all the stuff for you. But what we do
is that more like an email or like a website one, you mean, or is that a call one?
It's more like a website. You go in, put your stuff in, and they'll kind of generate some rates.
Okay.
Okay. What differentiates a broker is that we have access to, at Crane, we have access to over 50 different carriers. For the homeowner side, it's really down to about 7 or 8 we can go to. And so where we leverage our position is by going in, getting all your information, setting up against 4 to 5 different carriers, finding the best rates for you, but not just the rates. If you go online, you can type in all your stuff and whatever. but we know some additional coverages to look for that you might not consider or even think about, that could really we want to make sure you have all your assets protected properly, rather than just generating the lowest possible price. We want to provide you a fair price. We're not always going to be the lowest price, but it's kind of a trade-off. You give up a low price, but you get better coverage. And that's kind of our position.
Yeah, absolutely. I think that that's something that I've learned while working with you over the years. I'm not a guy who likes to pay more or whatever for the same thing. But I think what I've learned and I've experienced through situations that we've come through is that I'm not just paying like the lowest price I can for a piece of paper, right? It actually matters what it says on it. And
Right.
So when they talk about your deck page and your coverages and all that stuff, all those things really do matter. And I think that that's the main reason I've stuck with you and got, or a person like you, but I've stuck with you is because I'm not an insurance expert. I know that you are, and I feel like you're making sure I get the best coverage and it's not really just about the lowest price. Because once something happens, as we're going to talk a little bit about on this call, once something happens, you want the best coverage essentially.
Right. So, and part of our, not shtick, but processes, like I said, we're not going to be lowest cost out there, but we want to educate you on the different types of insurance are out there, give you kind of a menu and let you pick a la carte after the main stuff as to what you choose, what you think is right for you, and what you can bypass. And we're flexible. We like to work with people.
Yeah.
And we just want to make sure you have the proper protection rather than the lowest price.
Yeah. Okay. And not to hound on this price thing too much, but I guess I'm kind of wanting to make the point, and you tell me if I'm wrong. As you said, like you're not the lowest price out there, but I'm guessing you're maybe not the lowest price out there because someone else is suggesting you should pay this much and get this much coverage, and your guys' like first number would probably be pay this much, but you're gonna have this much coverage kind of thing.
Right.
You could be the cheapest guy if you wanted to, but you don't like giving that low of coverage, basically.
Right. And something we come across often is, State Farm will send out pamphlets and say you can get stuff for X amount of dollars for this much, but it's a bare bones policy. There's not a whole lot of coverage on there. It's just, it's kind of a bait and switch almost. Well, they'll say, we'll get you a policy for $800, but really once you add in all the coverage you need, it could be $1,200 or $1,400. So there's a lot of different variables that kind of go into pricing your insurance. The main thing is obviously the replacement cost of the home. One big thing we deal with a lot on homeowners or any property insurance really is the valuation of the home. A lot of people think, what you pay for it is what you insure it for. And that's very rarely the case. Insurance is guided by, and there are two options, but largely guided by replacement costs. So if you buy a house for $200,000 and the replacement cost, based on different calculations we have, comes out to $400,000, we recommend you insure the house for $400,000 because that's going to cost, if there's a fire and your house burns down, it's going to replace the cost like new, like kind and quality, plus some of the updates that city or county may require. But if you insure it for $200,000, which you bought it for, which we call an actual cash value, is kind of a fair market value, is a replacement cost less depreciation. So if you have a $400,000 house, you insure it for $200,000, burns down, you're not going to be able to build it like new. You're going to have to get that depreciated settlement and probably be out of a significant amount of your asset.
Yeah. But so I guess, is there some sort of rough formula? I'm a property real estate investor. And so when I'm looking at a building, someone's like, yeah, I'll sell you this building for $100,000. I like to put into my little mortgage calculator and estimate what my payment would be, which includes taxes and insurance. So is there like 1% of the purchase price, or like is going to be your yearly insurance cost? Is there sort of any formula for that?
I wish there was sometimes, but no, there's many different variables go into it. Type of house, whether it's a brick house or a frame house, when it was built. St. Louis is the city of St. Louis has tons of brick homes built 100 years ago on stone foundations. Yeah. If you go out to St. Charles County, it's a ton of frame houses built, 20, 30 years ago. Those are rated completely differently. Then you take into factor the type of roof, how old the roof is, and different exposures you have around the house. If you have a pool or a trampoline in the backyard, if you have a dog that's been known to bite, like a pit bull or Rottweiler, you take into account just the age of the home. There's a lot of different factors, and then you got to take into account claims history, whether it's if you had a prior house and you had a loss, that's going to follow you for a couple of years. You don't just kind of get to escape it. If you've been shown to have a higher probability of having a loss because you've had one before, that's going to affect you. And then the whole market as a whole, as we saw after the tornado in Joplin in 2011, I think it was, that plus about a week later, we had a massive hailstorm widespread around the area. Those factors are going to play into rating for any property, but especially homeowners policies. So long story short, there's not an easy, simple, easy button to come up with insurance rate. There's a lot of different factors that go into it.
Yeah, I remember this is a long time ago, but I was going to buy this building down in Benton Park and rehab it. And it was a big 3-story brick building, and insurance, I talked to you about it, and the insurance was going to be way higher than I would have expected because it was not going to be that much of a purchase price. But, come to find out, the walls, like these brick walls, are 3 bricks thick when they built it, right? It's like the outside brick, some sort of weird middle brick, and then the inside brick, plus then the plaster. And so to replace it like that, like they just don't build them like they used to. Right? It's just why it costs so much more, I guess.
Yeah, they don't. And that kind of goes back to our talk about why to use a broker. But some of the coverages we see that we pretty much almost, in our heads require us to recommend are, especially around here, earthquake coverage. Like I said, all the brick and stone foundation homes in the city, if there's a big earthquake, those are not built to sustain, that ripple effect. The frame houses, for the most part, are. And anything built after 1960 is generally in good shape as far as an earthquake goes. But earthquake insurance, we highly recommend. Water backup, water losses have been huge the past couple of years. And then some other stuff you might not even consider, debris removal. If as we'll talk about with your family's recent loss of your rental property. Debris removal is often overlooked in policies, and it's not generally included in the replacement costs. Some carriers it is, some it's not. And then ordinance and law is another coverage that sometimes is overlooked. If you have a house that's 40 years old and you've had the same inhabitants the whole time, and the house burns down, there's going to be a lot of stuff they have to change due to code. It's not going to be like new or like kind and quality. They're going to have to upgrade it, and that takes into account some of those additional costs you may not consider.
Okay. Yeah, so we've been kind of like mentioning this, but my family recently had a house that was my aunt's house. She passed away, and then we rented the house out, and then the house burned down. The tenant, I guess, knocked over a gas can or whatever, and next to the water heater in the house burned down. And so which is pretty awesome, is you came out and met with our family, which was great. But then there are all these different numbers and categories and stuff that have come into play with that. And I guess that's what you're talking about. Right. So in that case, we must have did we have the ACV or the replacement costs?
We had replacement costs on it for $250,000 or $260,000. It's, a 1,500 square foot frame home on slab. And we found that to be a pretty adequate valuation.
Yeah. So the way that ended up working out is that I guess the insurance company gave us the money for the replacement cost of the property. And in this case, we'll probably end up selling the lot. So I think that like financially it ended up working out, okay for our family. But then you mentioned that you had there's personal property coverage, there's liability coverage. So we had personal property coverage, which didn't have very much of it in the property, but that was money that the insurance company then let us use to pay towards the demolition of the property. Is that right?
Correct. So there's, I should have kind of touched on this earlier, but the 4 main types of the building insurance, there's coverage A, B, C, and D. Coverage A is the dwelling. That's the full replacement cost. If you have the replacement cost policy, you have after that the other structures, which is a patio or a detached garage or something in the backyard. That's 10% of the dwelling value. That's already built into the policy. Personal property is generally somewhere between 50% and 70% of that dwelling value. Say you have a dwelling value of $100,000. The other structures are going to be 10%, so you have $10,000. Personal property is going to be 50 to 70%, so you have $50,000 to $70,000, and then the loss of use is generally 20% of that same original $100,000. So you get about $20,000 for that. Cincinnati, our carrier on that one, who's one of our top carriers here, has been great. Part of what we pride ourselves in is putting our clients with carriers who have excellent claim service. They've kind of walked you through the whole process step by step, explained it to you, been open with you. And that's what kind of sets ourselves apart as brokers. We put you with carriers that we know have good claim service. As we've seen, it seems like your family's been happy with.
Yeah, I can totally vouch for that. You know what? It's almost like we probably take it for granted that we get, a guy from the company that comes to the house, that talks to us, that answers our emails and all that stuff. And we just probably are taking that for granted because in theory, if we would have gone with one of these other companies that we mentioned earlier, we might have just been like emailing some call center somewhere or emailing some customer service department or whatever, instead of having that great one-on-one. And you're right that is important. And it's funny that I didn't even think about how important it is until you just said it. And I thought about that there was another option,
Right. In our business, relationships matter. It's not just the people like you and your family we work with, but it's the carriers we work with too. We have great relationships with them. Those relationships are just as, if not more important than with our clients.
Yeah. So I think that most of the people that are going to be watching this video is going to be, in most cases, Hermann London clients that are recently put a property under contract to buy it, and they're just wanting to get more information about insurance. So, which is something that us as the realtors is saying, you need to be getting insurance, talk to your insurance people. And of course, their lender is saying, hey, who are you getting your insurance from? Give me their information. I need copies of the policies or whatever. So I guess you deal with the mortgage brokers and bankers a lot on that side of things.
Right. So we have a great staff. We have, we're set up a little bit differently. We're all individual small business owners. We have our staff that Crane provides, but we kind of dictate what they do. But Peggy's my assistant. If there's any issue that comes in through a mortgage broker or a client or whoever, they contact her. She gets them the stuff they need. She goes to the carriers, get the deck page, the information for the mortgage people. Sometimes for the realtors if they're looking for a potential cost. But we're a full service firm. We provide all that stuff. Yeah.
Yeah. Okay. And is it a requirement that you guys go to the property and do some sort of walkthrough or walk around prior to giving the insurance?
No, it used to be, but obviously things have changed since you and I have been in our, out of college. Google Earth is a great resource. But generally speaking, homes that are replacement costs under $500,000, sometimes people will go out and do a drive-by. A lot of times, especially in the current environment we're in with the pandemic currently going on, a lot of carriers have held back from doing in-person inspections. They'll do a drive-by, they'll do Google Earth, go on the county records website, find information on there. For homes over $500,000, especially over $1 million, the carrier will almost always either insist or highly recommend an in-person walkthrough. So they'll come through, kind of walk around the house, take a look at all your utilities, all your services, make any recommendations that may be preventative resources for you. But then they'll give you a full inspection report. So this is what we found. This is in good shape. This might need to be looked at, so on and so forth. So it can be a good tool.
Okay. And then I think you mentioned Joplin earlier. Was that when the rule came out that you wouldn't, not you, but insurance companies would not insure any property with a roof that's greater than 19 years old? Is that still a thing?
Well, it kind of evolved from that. It's been, Missouri is right in kind of tornado and hail alley, if you will. Uh, it's every year we're kind of, crossing our fingers, not a big hailstorm or a tornado like we saw down there. But to answer your question, it's kind of roofs, different carriers have different requirements. What we've generally seen is any home over, or any roof that's over 10 years old, they've been putting ACV exclusions or ACV limitations on the roofing stuff. So if your roof is built within the last 10 years, you get the full replacement cost. But if it's over 10 years or over 15 years, whatever the carrier requirement is, they're going to give you a depreciated cost to replace the roof. So if you have a hailstorm at your house today and your roof is 15 years old, they're going to come out and say, we're going to give you the cost to replace the roof less the depreciated value of the roof. So if your roof is, cost $10,000 to replace, and they say it's depreciated by $2,000 since it was first put on, then you'll get you'll get $8,000, and then you'll still have to pay the deductible. So you may only get, $7,000 or $6,000 depending on what your deductible is.
Okay. So let's talk about knob and tube wiring, if you don't mind.
Sure.
And it kind of plays into this other question I have, which I guess a lot of older homes have this wiring called knob and tube wiring, and someone can Google it if they want to, but essentially, I guess it's a type of wire that is more likely to cause fires.
Mm-hmm.
But what we see happen is a lot of people say, hey, I want to replace the knob and tube wiring in my house. They hire an electrician, they come over, and they seem to just replace it like where they can see it. They replace it in the basement, they replace it in the attic, but it's still all through the walls, and they may or may not even know that. And so I'm curious, obviously people can get insurance still when there's knob and tube wiring, but if the insurance company's not coming out and inspecting, then they're, I guess, leaning on asking the buyer, is there knob and tube wiring? And if the buyer says no, and then 3 years later the house burns down because of the knob and tube wiring, do they just not have coverage, or how does that work?
Well, it's kind of a
Tough
slippery
question, right?
it's kind of a slippery slope you touch on. Look, let's talk about what knob and tube wiring is first and foremost. Kind of people get a understanding of it. But between the 1880s and the 1950s, people didn't need a whole lot of electricity in their homes. So knob and tube is a two-prong wiring. Nowadays, there's every modern outlet you see has a three-prong. So the knob and tube has no ground wires, doesn't have the big one. And with the demand for electricity, with computers, TVs, there's all the stuff we have in our houses. There's a higher risk of a short or a surge in a potential house fire. The other thing is knob and tube wiring is generally covered by a cloth type fabric that kind of deteriorates over time. It's not good for a wet or a damp environment. It might diffuse or hit something and spark. So knob and tube wiring makes it pretty tough to get coverage. It's not impossible, but you're going to pay more for it. If the insurance company's not coming out inspecting, then if it's a new house purchase, you should have a good inspector come and look and make sure it's either been all extricated or all replaced. But in the event that you mentioned that it's just overlooked and it causes a fire, there would be coverage for it. There may be litigation involved after it between the homeowner, the insurer, and whomever else. But we recommend, if you're going to purchase a new home, make sure you have a good inspector come out, have a good electrician come out, make sure all your stuff is in good shape, because potentially, if you mark that there's no knob and tube wiring in your house, and then get the insurance policy, and they come out and determine that there is, coverage could be diminished or possibly even declined.
Yeah. Okay, that makes sense. I'm glad you're saying that. You're kind of mirroring what we're telling the people about getting good inspections and all that kind of stuff. And I just think that people should really be basically honest with their insurance provider so that they don't have anything to hide.
Agree. We're not trying to take you through the mud or drag you down. But we want to provide the best protection for you. But we can only do it based on the information you provide us for the most part. We have a couple resources for the basic property information, but it's really just kind of the honor code. If you're telling us bad information, then I don't want to say you're committing fraud, but it's questionable.
Well, yeah, and then, like with our house that burned down recently, there's professionals that come out. They hire this like fire expert guy or whatever, and he comes out and he's digging through it, and he found out why that fire started. It's not like they're not going to find out. So anyway, not to end on a bad note, I've been thankful to be working with you for so many years. I've met other people that say, hey, I call the Reedys for insurance, so we know you're with Crane, but I just think of the Reedys as my insurance providers. I appreciate that. I'm wondering, how can people get a hold of you if they want to call you?
Sure, I appreciate the opportunity to work with you for all these years, Adam. There's a couple ways. One, craneagency.com is the quickest way. You can also call our main switchboard, 314-241-8700. They can direct you to anybody. And we have 85 brokers throughout 4 locations. I work downtown. We have an office out in Chesterfield. We have a small office down in Springfield, Missouri. We have a few guys out in Kansas City, kind of working from home as we develop our footprint down there. And we have a small office in the Central West End as well.
Wow.
But the main way, 314-241-8700 or craneagency.com are the 2 best ways to contact with us.
Yeah, absolutely. And if someone wants to call you, they need to make sure that they mention the junior part on the end of your name, right? Because your dad still works there, doesn't he?
If it goes to my dad, I'll probably pick it up anyway. Just so it goes.
Okay, I'm adding junior to your name here. All right, perfect. Anything else you want to say? I appreciate your time today.
The one thing I might add is when for the personal property, people tend to overlook how much to put on there. But in the event you do have a loss, it might be good just to walk through your house and either make a list or take a video camera on your phone and just kind of record all the stuff you have. If you have a loss and you have to go through and think about all the stuff you had, it's going to be tough unless you have documented proof of it. And a carrier or somebody may ask for that as well. The second thing, we've talked about the replacement cost. A lot of carriers are adding special endorsements on your policy, be it a guaranteed replacement cost or a additional 25% replacement cost. Look for some of that stuff on your policies, whether it's through me or somebody else. But a guaranteed replacement cost is in the event of a major loss, say a tornado comes and wipes out a neighborhood. The cost of materials is going to go up. The cost of labor is probably going to go up as the supply of those materials goes down. It's basic economics. But say you have a $400,000 house we mentioned earlier, but after a massive storm, it's going to cost $500,000 to replace. If you're only covered up to $400,000, guess what? You're getting $400,000. Guaranteed replacement costs. It's pretty affordable. It's pennies on the dollar, really. But it guarantees no matter what happens, you're going to have the full amount to replace your home.
Well, you make sure you check that on my policies. That'd be great. Thank you very much, Mike.
I'll make it happen.
I appreciate your time today. Actually, if anybody is still watching, amazingly, will you give a quick, and I know I'm throwing you on the spot here, a quick 2 seconds on these umbrella policies?
Sure. Umbrella is just a basic, additional amount of liability. It's your homeowners provides a certain amount and your auto insurance provides a certain amount. We always recommend $500,000 just to be conservative. But a lot of carriers, if you want to qualify for an umbrella, you have to meet a certain threshold. So your homeowners provides you liability for any potential negligence or something you're liable for at your home. Your auto provides liability protection for what you do driving your car around. The umbrella covers all that and just provides an additional $1, $2, or $3 million limit for a pretty affordable rate, generally about $150 the first million and incrementally less as you rise from there.
So that's the umbrella. I have an umbrella through you. That's all about liability reduction.
Correct.
In case
umbrella,
I just do something crazy.
Umbrella is just additional liability it basically protects your interests rather than having somebody come after your own personal assets.
Yeah, and I think that's it's a really good fit for somebody like me with kind of like multiple properties and all this kind of stuff. I got a lot of things going on, and so it just feels good to have that extra coverage.
And as you know, we're at the stage where we both have young children and we'll have kids coming over our house and stuff like that. You never know, what kids are up to. It's always good to have an additional million or two, or at least consider it, just to have it have additional peace of mind in case something goes wrong.
Yeah, perfect. Thank you for your time today, Mr. Reedy. Hope to see you soon.
Thank you, Adam.
And my pleasure. Take care. Have a great one.
Yeah.
Bye-bye.